Good morning, everyone. So today we have Brandon Gibson of Steinbridge, and we're going to talk about impact investing and residential and multifamily deals and all kinds of other stuff related to that. So good morning, Brandon. How are you doing?
Good morning, Josh. I'm doing amazingly well. How are you?
Great. Doing great too. Thanks for asking.
Wonderful.
So I guess first off, I always like to get out of the way. Your website obviously is steinbridge.com, STEIN bridge.com. I always like to mention that because invariably someone will email me later. So let's start with what do you do at Steinbridge?
Managing Director of Acquisitions and Development.
Got it. So day to day, looking at new deals, building the pipeline, bringing it through the pipeline, so to speak. Um, what was the start of Steinbridge? Like, how old of a company is it? Why was
Yeah,
it started? That sort of stuff.
great question. So Steinbridge started in 2016, founded by Tawan Davis, our founder and CEO. The initial idea was to purchase office buildings around the country, and the first deal executed by Steinbridge was an acquisition of the Watergate office building in DC. And shortly thereafter, Tawan saw where the economy was going. I mean, WeWork was taking over the world in the office space ecosystem, and no one knew that COVID was going to happen, but it ended up happening, obviously. And so there was an idea to shift into residential, but the question was, in what way, in what manner should we shift? And so we thought through, should we do multifamily? What should we do hospitality? But the idea of being able to jump into residential and be meaningfully impactful, I think the best opportunity came about with single family rental and built to rent opportunities around the country.
Now, I mean, SFR has been definitely a burgeoning field. So, right now of your portfolio, if you had to guess, like what percentage of it is stuff that you bought? What percentage of it is stuff that you've built? How big of pipeline do you have? Like, what's your involvement in SFR?
Great question. So right now, our pipeline is probably 60% built to rent, 40% SFR.
Okay, okay, okay. And markets that you're most active in?
So we're mostly active in the Northeast
Okay.
for SFR, and for BTR, we're mostly active in Texas and today Richmond, Virginia.
Build to rent. And that's all like the build to rent stuff that's again single family that you're building to rent,
Correct.
basically.
That's right.
Right.
That's
Okay. But no true, not that it's good or bad, but no true like multifamily. Like,
We'll do small multifamily, and we are getting opportunities for master planning in large developments around the country. And the idea would be for us to do a mixture of single family townhomes, multifamily, hospitality, retail, all of that. But outside of those sort of ancillary multifamily, rather master planning opportunities, for the most part, it's SFR, BTR, and small multi for the most part.
so let me try another angle. Like, what makes a deal work for you guys? Like, I mean, when I did brokerage, everyone would talk about the natural buyer, like what's your natural deal, if you will?
Great question. Great question. So I think what's different about us, I mean, anybody can, build a building or buy a property, and clearly we're doing that. All of our deals, pencil, but we really believe in partnering with institutions. So everyone's aware of Trinity Church on Wall Street. It's been around since what, early 1700s. Queen Anne gave the church the charter for 200 acres.
I used to rent space in Lower Manhattan, which was on land in a building that was owned by
Exactly.
essentially Trinity Church. Sure.
Exactly. They own all the land underneath the New York Stock Exchange, the NASDAQ, and so on and so forth. And so they have $6 billion real estate portfolio as a church, right?
Sure.
I grew up in church. Tawan, our founder, grew up in church. We were like boy preachers growing up. And we realized that though there may not be many Trinity churches around the country, there are these mini Trinity churches and not just churches, but institutions
Sure.
that are real estate rich but cash poor. And
Right.
they might have the knowledge on how to develop, and they don't necessarily want to sell either. And so what we decided was, given that we have a lot of deep institutional understanding in the church world, and particularly in the Black church world, institutions like academic institutions, universities and colleges and nonprofits, we have pretty deep understanding and relationships. We figured, why don't we activate those relationships, and in so doing, activate the land that's undeveloped and underdeveloped with these institutions.
And when you say institutions, obviously we're talking about, I mean, it's funny because a lot of times in our field, when people say institutions, they mean like Credential, TIA,
financial,
CREF. You mean in this case,
social and religious institutions.
right, cultural and religious institutions. Yeah, no, and that's an excellent point. I mean, a lot of them, they have excess land, they have
Exactly.
sites that they've shuttered, and their real estate people, at least in my experience, tend to be more of maintenance, property management people rather than development people, which serves the mission. I mean, if your church, your goal is to have the roof not leak, not build a
Exactly.
tower. I mean,
Exactly.
that kind of makes
Exactly.
sense. That kind of makes sense. So
Exactly.
that's interesting. So you go to them and you say, hey, you guys have excess land or you have assets that can be monetized.
Yep.
We partner with you. And in that case, I mean, they're the ultimate owner of the site, right? Because they want to keep it for portfolio. So then are you leasing it long term for them? Like,
Good
what's
question.
like a relationship?
Great question. So we just ultimately enter into a joint venture. And we function as the GP, and they basically are an LP, and they contribute their land to the joint venture, and we develop it together. We pretty much raise all the capital to develop the property, and we manage it, obviously, as the GP. And the institution benefits from clearly creating another revenue stream for the institution. For example, we're working with an HBCU here in the United States. Can't say the name just yet. We're going to do a big announcement in the next couple of weeks. But we're developing all of their land that has been undeveloped for quite some time. They've owned it since the 1800s,
Right.
and we're in partnership with them. And much of the proceeds and the revenue generated from this development will go towards building their endowment. It represents over a third of their endowment alone today. A lot of these institutions, particularly the historically Black colleges and universities, there's about 107 of them. Half are publicly funded, the other half privately funded. The ones that are privately funded have to rely quite heavily on, raising money on their own and donations and grants. This presents a platform for institutions like HBCUs to create another avenue where they can be financially and economically independent by developing their real estate, particularly with us.
I did not know that there were over 100 historically Black colleges. I knew that they were out there. I mean, obviously, because I'm an American, but
Yep.
like, I did not know that there were over 100.
Yep.
No, it's interesting. And I mean, generally, a lot of the historically Black colleges are predominantly Southern colleges and universities,
Correct.
right?
That's right.
Predominantly. Yeah,
Right.
yeah, yeah. Okay. Yeah, that which goes back to a whole history that is
That's
a
right.
much larger conversation.
That's
But
right.
that's interesting. That's interesting. No, and were some of those also land grant universities? Like, were they land grant guys? Like, where they were given the land by the state, or it's just sort of they had land?
Some of them were for the most part, but at most of them, from what we're seeing, had to rely quite heavily on buying land on their own and starting it on their own, whether it be a
Okay.
church. The church was huge in that, and several other institutions that kind of got together to create these colleges and universities.
Yeah, AME, that's African Methodist Episcopalian, Episcopal. And then, and what is it? HCBU is historically,
Historically Black colleges and university.
what's the C stand for?
College.
College. Okay. Historic College, Black University. Got it. SCBU. Yeah. Okay. No, I
H-
wanted to
HBCU, historically Black
Black
college.
college and universities, HBCU. Thank you. I wanted to clarify that both for
Sure.
myself and other people listening because we are unfortunately in a sea of acronyms. And not that you would know this,
Right.
but when I look at my YouTube viewership, about 40% of it is US. So obviously to the other 60% of the
Wow.
world,
Not gonna know. Yeah.
this is all
Right.
very new
Yeah.
language for a
That's
lot
fair.
of them.
That's
It's
fair.
their new language. No, and it's interesting because I mean, some of the conversations that we're having
Yep.
about, historically Black colleges and what have you. I've got a colleague of mine out of Australia, and we've had conversations about, other indigenous populations, and it's not dissimilar conversations about universities that were targeting one particular community group who then have excess land, and then how do you access that, create value, and support the mission? Because obviously, at the end of the day, the money goes back to the university because they got to like run a school. So
Correct.
no, it's
Exactly.
interesting. It's fascinating stuff. So here's another question on a similar angle. So I've done a little bit of work with not-for-profit institutions over the years. How do you, so to speak, get in through the front door? I mean, you're a private sector guy. You come to them, like, why you? How do you get in touch with them? What's the I guess a nice way of putting it is, why should they trust you? Like, why would they open up about what their issues are?
A great question. So I think we initially started this. One of our anchor deals was, or is rather, in Texas. Very, very large, well known church and pastor there, internationally known. And we partnered with them to do about 184 townhomes in Texas. And we actually didn't reach out to them. They kind of heard about the work that we were doing, much of the things that Tawan was doing around the country, and reached out to us. And I think when you're dealing with institutions, social and cultural and religious institutions, there's a language that they speak that is very distinct from other aspects of social life.
Yeah.
And we have an ability, because we grew up and have been steeped in that culture, we understand how to speak that language, and we understand their needs.
Sure.
We understand that their real estate is not just real estate for them. They have been in these communities, for many of them, hundreds of years, literally. And so it's more than just making sure that the IRRs are right. That's important for us, obviously, and ultimately important for them and our investors, making sure, all the numbers pencil, that goes without saying. But how do you connect a deal that can pencil to a deal that can be impactful, right? And I think our ability to connect those dots is very unique and very distinct from many other firms. For example, what we're doing with HBCUs, and we'll announce more of this, later on this year, but being able to not only generate capital and develop their undeveloped land, but we're figuring out ways to incorporate students into this development, in not just living there, but how do we economically impact the lives of students? And we'll announce what that's going to look like later on this year. How do we create opportunities for students and admin to socially and economically benefit from this development? And so, that we're thinking about it not just from a real estate perspective, but from a human perspective, because at the end of the day, people have to live in these homes. People are the faces and names behind these LLCs. How can we impact the broader community with the real estate that we develop? And I think that's what separates us from the rest of the pack.
No, and I appreciate all that. It's interesting to talk about just sort of building the connections and talking about how real estate development has to be about community development at the end of the
Absolutely.
day.
Absolutely.
It's it's more than just, we create a property tax bill that we pay. It's
Exactly.
actually, how do you impact things? No, it's
Exactly.
fascinating stuff. So we talked a little bit about plans for the next few months. You talk about how you've got some new things coming out, and obviously you're working on additional projects. And I realize there's what you can address and can't address, and
Right.
totally respect that. One other question I wanted to throw out there, which is a little bit of a side conversation, but still something I've been thinking about, wanted to get your take on it. So rent regulation has become more of a thing, I would say, over the last decade. If anything, the pendulum seems to be swinging towards rent control and rent regulation rather than away. And, there are broader reasons why, about, cost of living and, politics and whatever. I guess what I would ask is, does that affect you guys? Like, in the markets you're operating in, is that a concern? Is that part of the conversation?
Great question. Great question. So we focus on naturally occurring affordability and attainable housing. 70+% of our tenants are essential workers. We focus on workforce housing. So we, by default of our business plan and our strategy, we focus on the middle market. Our tenants are not paying more than 30% of their income on rent, right?
Right.
And we're still able to put up pretty impressive returns for ourselves and for our investors at the same time. So that doesn't really affect us much in the markets that we're in today. But again, we lead with, how do we create attainable housing, right? So I think it puts us in a position where we don't have to be reactionary to the market and to market changes, particularly around rent control or rent stabilization. We are already baked into our business model is a strategy to make sure that our renters are not paying more than 30% of their income. We're still, having pretty healthy returns, and at the same time, we're able to provide a benefit to our investors. And I think we've really done well at creating that niche for ourselves.
No, that's interesting to talk about. Yeah, I mean, and I get that. If you're starting at a rent that's reasonable, then as long as you're basically growing with inflation, you're growing with inflation. Like, it doesn't really matter at that point, whether or not it's 3% or 4% or 2%.
Exactly.
Who cares, right?
And I think,
No,
that's
curious.
I think also, we were in the SFR space, right? SFR is the most valuable asset class, even more than multifamily. It's worth about $4.7 trillion with a T. I think multifamily is about 3.5 trillion. And even with that said, there's only about 300,000 SFR rental units that are institutionally owned. It's about 1.5% of all rental units that are SFR are institutionally owned, 300,000. So the opportunity for growth in that space alone is monumental. And rents are and have been rising for quite some time. There's been a deceleration over the last 15 months or so, but that deceleration doesn't compare to the amount of rent growth that the space has seen over the last 3 years. I mean, in Miami alone, I mean, I think over the last couple of months, we've seen some deceleration in places like Miami. I think rents went down about 0.6%. But over the last 3 years, from 2020 to 2023, rents increased about 55%. And so I think there's an interesting conversation to be had between SFR rent growth and how it affects the broader sort of country and renters in general. But it's an exciting space and an exciting time for our company, and I think we're moving in the right direction.
I would say, just as one thing to cap off what you just said, it's interesting your point about how the single family rental market is only about 1.5% institutionally owned, because I mean, at least if you read the press, general media seems to make it sound like
Right.
every house in America is owned by Blackstone and rented to people. And, I mean, as someone who lives in a single family home in a single family market, most of the people own their own homes.
Right.
I mean, there are rental homes, but it's a relatively small percentage of the housing stock. And
Exactly.
then a smaller percentage of that is institutionally owned. So it's actually, I mean, I'm not saying it's not an impact, but it's not this
Yeah,
cataclysmic conversation
yeah,
that people
I
have.
agree, and it depends on where in the country we're talking about, right? So if you're talking about more judicial states like New York, New York represents 7.8% of U.S. renters, but only 2.1% of structured SFR investment, whereas Nevada is a non-judicial state and it represents about 1.1% of U.S. renters, but 11.1% of structured SFR
You want to
investment.
explain what you mean when you say judicial, non-judicial?
Sure. So there are judicial states and non-judicial states. Judicial states in terms of real estate and particularly around laws around foreclosures and mortgages.
Right.
In judicial states, those are states more so in the Northeast and more liberal states where you can foreclose as a bank on a property on a Monday, but it can take 10 years to go through the foreclosure process.
Yeah, it can be a saga. Whereas non-judicial are relatively zippy.
Non-judicial, you can foreclose on Monday as a bank and take possession the following week. And so institutions have invested, like Colony Capital, Blackstone, all those guys. They invested more so in non-judicial states where they can very quickly and in short order attain and acquire massive amounts of homes that have been foreclosed on, and that process wasn't taking 5-10 years as it would in a more judicial state like New York or Connecticut or Pennsylvania.
Which is then why it gets in the news, because if you're foreclosing on a bunch of homes
Exactly.
and you're kicking families out, needless to say, you end up on the front page of the paper.
That's right.
Yeah. No, it's interesting. Yeah, the impact of regulation and how it affects residential. I mean, I've worked in different sectors in our industry, and the recurring theme in my entire career has been that residential is highly regulated and commercial, you can do whatever the heck you want.
That's right.
I mean, it's
right.
office. No judge has ever cried over an office tenant getting evicted for non-payment.
Not that I can
It's a business. You don't
right.
pay, you get evicted.
That's it. That's simple.
Straight conversation. Yeah.
That's right.
No, it's and there's all kinds of other things we can say about that. Well, this has been illuminating, which is why I wanted to talk to you, and hopefully other people will find this interesting. So I've come to the end of what I wanted to ask, and I guess I just say thank you very much for your time. And for those of you tuning in, again, the website is steinbridge.com. And that was Brandon Gibson, Director of Acquisitions and Managing Director. Great. Thank you very much.
Thank you.